Today. We will move on. There's Seven West breaking news as well. Another report we got out with full-year underlying EBIT at 235.6 million, down 10%. So lots to get through this morning. Let's bring in James Gerrish, who joins us from Shaw & Partners in Sydney. Before we get into earnings, James, good morning to you. BHP is obviously the big one today, but there's also this sort of backdrop of Malcolm Turnbull and pressure on leadership, which, you know, we hate discussing here in markets, but it does tend to impact some sentiment. Is it impacting sentiment? Will it impact sentiment at the moment?
Yeah, good morning to you, Ingrid. As you made mention of, earnings will be the main driver, but the political backdrop is an uncertain one at the moment. I'm not sure if it really will drive markets. We've had so much of it in the last few years that, you know, markets seem to be quite immune from it at this point in time. So, look, it'll be interesting. It's obviously creates an overlay of volatility here that doesn't help, and from an international standpoint, it makes it, you know, Australia typically less attractive from an overseas investment standpoint. So, look, I don't have any insight more than you guys do in terms of what's happening in the political realm, but it could create some volatility on the market today. All
right, we'll watch this space, particularly throughout the session, but let's get into the big one. BHP out with numbers this morning. Obviously a record dividend of 63 US cents a share, but the key here is statutory profit falling 37% to 3.7 US billion. Underlying profit up about 33%. So if you strip out some of those impairments, looking better, but it was a miss on expectations when it comes to including those impairment charges, that statutory profit falling. What do you make of the number?
Yeah, I wouldn't get too hung up on the profit line there. I think the underlying earnings for the full year are the main thing to keep an eye on in terms of this result. So they came in at 9.62. The market consensus was at 9.18, but there are a few outliers in that number. So, yeah, the real consensus was probably around that 9.3 billion mark. We're at 9.37 billion, so it's about a 2% beat on an underlying basis in terms of earnings on our expectations. You may mention the dividend at 63 cents per share. Market was at 60, but again, there was some outliers there. So we were looking at 72 cents per share in terms of the dividend, taking the full year dividend to $1.27. I saw a couple of other outliers. UBS, for instance, was at $1.30 for the full year dividend. So that put their final dividend at 75 cents per share expectations. And I think the other major thing to look for is around the commentary around capital management. There was only a slight footnote at the bottom of page 5 on the presentation around capital management, rather than anything more forceful in the presentation pack, Ingrid. Well,
I mean, are you surprised by that? Because BHP's also said that, obviously, in light of the sale of its onshore US business for $10.8 billion, the net proceeds are marked to return to shareholders. So is it still a priority? I mean, a big priority for BHP?
Yeah, they did say it in the presentation, so it was down on a footnote in the presentation. They said that the $10.8 billion would go straight back to shareholders when the transactions were completed. So yeah, there was some view in the market that they might have brought forward, because the transactions are being settled in two parts, so $5 billion sooner, then $5 billion again later. There was expectations, given their position around cash and debt, etc., that they may bring forward the complete payment back to BHP shareholders sooner rather than later. It doesn't look like it's happened, and as I said, they made one sort of glancing footnote on the fact that they are going to pass that through, but it is going to be when the transactions, so I guess in two parts in that regard, are completed in time.
Cost guidance is something we're watching with the miners in particular. Cost guidance, unit cost for the FY19 year expected to be less than $11 a barrel. So that's guidance for cost. What's your take on this? I mean, cost is obviously very important. We've been watching it with the Rio and Fortescue as well.
Yeah, it is. I mean, they've got the costs, I should say, across the mining space are rising. We've seen it across many industries in this reporting season that cost pressures are rising, and BHP is doing a really good job in managing costs, but there is an underlying pressure in terms of costs going higher, and you can see that in this result. Just going back to capital management, because I think this is what the market will be focused on today. So if you look at, our view is that they were going to pass that $10.8 billion back to shareholders when they received it, so pretty much in line with what BHP has said. Other brokers out there, so Macquarie was saying that they could do $6.5 billion off-market share buyback here in Australia. UBS were looking at for announcement of a $2 billion share buyback here in Australia in the immediate term. So I think the market may be a little bit disappointed about the lack of clarity around that capital management, and I think that's probably going to be key to this result today.
James, why do you think they've chosen to do that?
I think they want to wait for some certainty around when they get the cash and pass it through. I don't think there's, is there the market gets fixated with a particular area from a company. So we saw it in Rio as well. They weren't as explicit around their capital management initiatives going forward. BHP, why not wait till the money hits the coffers and then pass it back to shareholders? I guess they've guided to it already. The market gets ahead of itself and thinks that that they should be passing it back as quickly as possible. I've said it before on this program around buying the rumour and selling the fact. I think that might be the instance in terms of the miners at the moment. We've seen Rio drop around 25% from its recent highs. BHP's held up better than Rio, probably more so on the oil price, but also around the market hanging its hat on this report that would detail more explicitly around capital management, and it hasn't delivered today in terms of that.
All right, that's interesting. So we certainly could see a hit when it comes online today. I mean, would that be something that would be sustained, do you think, for BHP? I mean, does this put a bit of a discount on the stock going forward?
Yeah, it's going to be hard to know. I haven't seen, it was down a little bit overseas, so there's going to be a negative flow through already in terms of BHP opening today. It depends what the market focuses on. I mean, the earnings were a slight beat in terms of what we're expecting for the full year, so about 2.5%, on the underlying basis, so about 2.5% beat. I wouldn't get too caught up on the dividend. I think the dividend was broadly in line with expectations. Expectations 60, they delivered 63, but we're at say 72, for instance, in terms of our dividend. So I think the market will be focused on this capital management and the lack of detail there. So I would envisage that the stock will be down today, but the earnings were 2.5% beat on an underlying basis, so that may offset the lack of detail around capital management.
All right, what else are you watching today? There's been a lot of other reporting season numbers out. Amcor, Super Retail, Scentre Group. Any others that are getting your focus for the open?
Yeah, in terms of Amcor, I mean, revenue came in at 9.3, the market was at 9.4, profit after tax of 724, the market was at 725, EPS in line. They didn't give guidance, but they said growth was going to be remaining strong. To give you an insight into what market's expecting already, the market's at 11% post-profit for increase in profit after tax for Amcor. So, the market's pretty upbeat in terms of what growth expectations they're looking at. Just looking at Super Cheap, that looked like a reasonable number in terms of what Super Cheap delivered. So they delivered 145 million in terms of profit. The market was at 140. They didn't give guidance, but they said that growth was currently tracking at between 3 and 7%, depending on what areas of the business you looked at. The market's sitting at EBIT growth for the group into FY19 of 8%. So look, it looked like a reasonable result in terms of Super Retail Group, and Healthscope's out today, which will be an interesting one. Yeah,
that will be interesting. Just briefly on Amcor, though, before we move on from that one, obviously in this $9.2 billion takeover of Bemis in the US, will that be a big focus of the market today in the conference call when the Chief Executive and management is on that call? Do you think there'll be questions around synergies? There's obviously a bit of controversy going on. There's a bunch of law firms in the US scrutinising class actions against Bemis on this buyout. What's your take on, I guess, how much of a focus this will have today by the market?
Yeah, it'll be a massive focus for on the conference call for Amcor. I mean, the results have come in pretty much in line with market expectations, so the market will be focusing on that. It's a massively complicated acquisition. It's a large acquisition. It's going to really turn the dial and change the future of Amcor. So, guidance in terms of Amcor is probably irrelevant. Where the market sits in terms of their earnings expectations in Amcor is probably irrelevant. It's how management articulate their strategy around the takeover, and how that takeover eventually will be integrated. So the look and feel of Amcor will be a lot different in the years to come than it is now. So a complicated acquisition, and looking back historically, companies that make large acquisitions tend to underperform as they bed down those acquisitions. So I'd be a little bit cautious holding Amcor leading into such a big acquisition. There's so many examples of that on the ASX where companies have struggled after making a meaningful acquisition.
Yeah, that there is. All right, James, we'll leave it there with you. We'll let you get back to it. Thank you very much for joining us on the show this morning.
Thanks, Ingrid.
Lots to get through with all the reporting season numbers. Let's, though, take a change of pace now. And for you business travellers, check the